Now, the reputational litigation risk due to COVID, right? Now, this point, I think for the completeness, because I told you at the end, I'm also showing a nicely written answer so that you can easily read it after this session, so you get a very good knowledge about whatever we have discussed so far. So let me, so the sales part we already covered in full. And another part that I want to cover in little detail is this property, plant and equipment, older machines. So let's write that issue here as the third audit risk. And let's now actually complete this one sentences also, right? Please write now, what is the related party business risk? Then we will complete our answer. Related party business risk is that because this is a foreign company, foreign country, this is a foreign country, there may be non-compliance with laws. Now, especially if you want to say that law, usually the law applicable is transfer pricing law for, this between countries transaction. So that's the answer. Here, the related party transaction may not be properly disclosed. Not only parties, even the transaction may not be properly disclosed. So, what is the audit procedure? Now, in usual answers, if you want to audit, I'll do another quick session with a past paper question on how to audit related party, but it's very easy. The first thing you have to do is to ask from management, right, few powerful questions about related parties, right? Now, these questions relates to what are the related parties you have? These are actually as a part of auditor's risk assessment, right? What are the, more than what, who are the related parties? Who are the parties? And you will also ask, has there been transaction during the year? See, has there been transaction? The next thing is, what controls are applicable for related parties? Now, somebody has to approve, no? What controls are applicable? So, like that, you ask these questions from related parties. And also, it's very important because, see, sometimes there is a greater risk. The parties that you don't know. Now, director we know is a related party. Say director's spouse has another company and we don't know that company's name and that party may be missing. The last year that party may not be there. So, you have to specifically ask that question, inquiry about previously unidentified related parties. Previously unidentified related parties. So, these are all inquiries. Remember, as a part of this, the biggest risk for related parties is the possibility to have what? Unusual transaction. You have to specifically check whether there are unusual transactions. This word you must remember. What is the word? Outside the normal course of the business. Normal course of the business from Bangladesh company, you only import material. But imagine this company has a property sale to Bangladesh company. That is called unusual transaction outside the normal course of the business. So, you can definitely write that as an answer. Check whether there are transactions. This is very, very important. I write in a different color. Check whether there are transactions outside the normal course of the business. Example, property sales. Now, the next question is, how do you know whether there are property sales, fund transfer, etc.? That is, whenever you get bank confirmation, normal audit procedure will reveal something unusual. Now, when you get a bank confirmation, you can see bank has responded. There is a specific bank account that company has related to Bangladesh in company's book under someone else's name. So, that through normal bank confirmation you can find. When you audit expenses, you find there is unusual expenses under the name of this director. So that normal audit procedure may reveal instances of related party transaction. So that is, auditor has to be, remember this word, be alert to unusual, be alert towards related party transaction during the normal audit. Give some example during the normal audit. Example, when you audit bank confirmations, and then expenses, other account balances like expenses, etc. So like that we can write more. We only have 3 points. That's about related party point. And then COVID point, we can easily say disruption due to COVID. So as a business risk, this may affect continuity of the business. Done. So we don't write audit risk for this. Competition due to law, sales point, we fully wrote. The litigation due to non-compliance with environmental law. Why? Right? So if you want to explain this, litigation due to non-compliance with environmental law may result in, as a business risk, fine or penalties. So that's it. No, as audit risk, what is important here, right? This may result in, I explained to you, provision or contingent liabilities. Provision or contingent liabilities, right? How? You can say that litigation, if litigation results in, you must use these words, what obligation? Present obligation. With a probable cash outflow. Cash outflow. So it results in a provision. Otherwise, see this word, if it is a possible obligation, please highlight the word possible obligation. Possible means not sure whether it will happen or not, is doubtful. Then disclose as a contingent liability. So again, let me to erase this part. How do we audit that? First of all, we need to know whether the company has reported any of such provision, no contingent liabilities. So one of the easiest thing to start with, right? Obtain a list of provision. Now contingency, don't know list, you can read whether they have disclosed. Obtain a list of provision and see if there is any change during the year, which means they have charged something. If there is any change, that will tell you it is charged or not. But more than this, in this case, you see, your answer should be very practical. The company is releasing oil to the environment. So then, has there actually been environmental complaint from the environment regulation? You have to check that. Check correspondence. See, this correspondence matter is very important in exam answers. To actually see whether there is an issue like this, check correspondence with environmental authority. Now that correspondence says that the present obligation, remember, assertion is existence assertion, this is actually there. And then the best part is to tell you whether there is a present obligation or not. How do we know? The present obligation, remember, can be, please write, if it is a present obligation, it can be legal. Legal means the law, or contract, Oh, constructive. Constructive means you have given expectation to some party and you will always clean the environment. You have not done, then you can sue. If there is a law, but here there is an environment law, clearly there is no need to go to constructive. There is a legal obligation they haven't done. So the best audit evidence you can get from whom? A letter, confirmation from company's lawyer whether this is likely to happen, this litigation. That's a very powerful audit evidence. You can write, confirm with entity's lawyer the possibility. One is you can ask the possibility and the amount. Amount also some indicator if you can get. But how do you know whether there is a cash flow or not? Right? Whether there is a probable cash flow. So the best way to audit that is subsequently has there been a payment? Right? Check payment. Check subsequent payment. Done. So that's how you answer litigation point. Done. So now we are left with only one out of that. There's another litigation point. I don't need to write the same answer. It is same. Right? Now see, there is a damage by customer. No? So what are the audit evidence you want to get there? The first thing is you have to check customer claim document, correspondence with the customer. I'm talking about this brake or the engine problem that was there. And same way you can confirm with the lawyer the possibility. Same way you can check whether the subsequently same answer. I have to explain only one thing now. That is that for property, plant and equipment. That's going to be very, very powerful discussion, because I also use that opportunity to explain to you how to audit a given assertion. Now, first of all, what is our problem with that 2 billion expenses? If you identify the problem correctly, then you can easily write the audit evidence part of the answer. The problem is this, what is the word that I said? Subjectivity or judgment involves in determining accounting treatment. So audit risk relating to PPE valuation, you can directly write your answer. See, very powerful way to put down this answer. Subjectivity, not sure whether it is minor, major, whatever. Subjectivity and judgment. Judgment involved in capitalizing 2 billion. Right? So this is your risk. So specifically 2 bullet points. Possibility of capitalizing items of revenue nature. That's wrong. Similarly, other possibility of capitalizing, possibility of charging to P&L items of capital nature. Now we have to audit these two. No? How to audit? Very easy. Possibility of capitalizing items of revenue nature, charging to P&L items of capital nature. Now how do we audit? That's where I want your attention. First of all, get a list. Always get a list. Obtain a list. Then you will tell what the details are. And then if you want to judge whether something is a capital expenses, what you need to check? Go to the supporting documents and see whether this has more than 1 year. Check the supporting documents. Check the supporting documents for items capitalized and decide whether it meets what criteria in L case. Whether it meets 2 criteria. Criteria in L case 16. What are the 2 criteria? The 12 months and then economic benefits. Done. Now the most difficult question you will not answer. How do you know if they have charged to P&L the items that they should capitalize or not? Only smart student can tell. For that purpose, you have to audit not the, now here you are auditing the FAR, fixed asset register. You pick a sample from FAR because you obtain a register, no, so the obtain a list. That list already 2 billion is capitalized. You picked a sample, so you picked 5 million out of this 2 million, 500,000 worth of machine. You check the invoices, okay. But now the question is, what is not here? Something that has gone to P&L. What account? That account is called repair and maintenance accounts. You check the repair and maintenance accounts and see there is a P&L charge saying that major refurbishment, some component they have put, they have charged to P&L, that component has a lifetime of more than 1 year. So that's how you write the answer. So the next part is check. That's a very powerful answer. Check. Repair and maintenance accounts to decide whether expenses of capital nature has been charged to P&L. So those are, very important. Now with that we have fully done. Now you see the power of this session that I explained to you. Now we'll go back to the we go back to the screen and show you what principles we learned in this session. I'll also use that as opportunity to explain analytical procedures, and also finally you are given with very powerful few notes, and also these concepts will go to a toolkit. Let us look at that now to conclude this. Now let us look at the simplified answer. Maybe whatever I wrote whiteboard, because I wanted to make it live and make you to work. That's the same style we will look at other questions. So let us see, this one you will get now. So how to write, to the point answers. 4 business risks, the related party transaction risk, supply chain disruption, competition, 1 line answers, reputational risk, management integrity risk, going concern, right? Then when it comes to audit risk, we are talking about related party, provision, in the provision, the present obligation, PP valuation, right? See the significant judgment, customer claim, and see the auditing of related parties start with inquiry, the alertness, and you have to check last year working paper, board minutes, etc. Revenue recognition, how to audit the cutoff, accuracy, sales return, fake invoices, everything that we discuss. If it is a provision, see this red word indicates what you need to audit, reliable estimate, outflow, PP valuation, everything is properly written for you to refer, but don't refer this without your answer. Now that analytical procedure thing, first of all, to begin with analytics, so now this becomes a revision of analytics standard in 5 minutes. I explained to you now this is the question that is given to us. Analytical procedure, right? Verify the revenue and rebates, right? Now, first of all, to be aware about the definition, I said 2 things in this definition, right? Now, this is very important. Now, all this is going to one summary chart that you can refer. Analytical means I use 2 words. One is evaluation, right? Evaluation of financial information. Evaluation actually is about comparing, right? That's the word behind evaluation. You always do some comparison, right? Evaluation. And then investigation of fluctuations and relationship. And then you ask from the management that why something is unusual. Inquiries of management and obtaining appropriate audit evidence relevant to management response, right? And based on this, you will do some other works. Now, see the complete definition also I'll show you. That is this one. Analytical procedure means, now don't ever forget this word, evaluation of financial information, and that is a comparison. Now this looks a big word for you, that more than comparison, here they use the word plausible. Now actually it's a comparison. Plausible relationship means another word, predictable. No, plausible means sales increase, so the commission increase, so cost of sale increase. That's a study. So evaluation is always done by comparison, study of this relationship. The other word is investigation. So whenever you want to write in the exam, remember these 2, evaluation, investigation, so that you identify deviation which are significant, right? So another thing that I explained to you when you do analytical procedure, now it is about comparison. What are you? Even in the answer we said, we can compare with the last year, right? We can compare with the last year. or the expected, now this is the amount we expect, the 5% expected amount, or industry data you can compare, right? And you can compare financial and non-financial. Payroll divided by number of employees, non-financial, and different elements of financial statements. So that's the type of analytics that can be done. And in auditing, analytics are used at 3 stages. Very important. Now, these are beyond the past paper. In MCQ, they will ask 3 use of analytical procedure. At the planning stage, I told you the risk assessment auditor is used in analytics as a tool to see whether there is any risk. Use as a risk assessment procedures to identify anything unusual. Analytics can only be used as audit evidence when Sarah is there, right? Who is Sarah? You know Sarah? Sarah, it has to be suitable, you need to have expectation, your data should be reliable, and the deviation should be acceptable. Sarah, if you know Sarah, the last question you will automatically answer. And finally, after the audit, if there are issues should be corrected. Then finally you do another analytics before giving the opinion to see now all the ratios look normal, to confirm overall conclusion whether financial statements are consistent with auditor's understanding. That final check is final analytical procedure. So now the answer to that question is this, right? Now this is Sarah, suitability, acceptability, reliability. I already covered that. Now let us see how that part of the answer is written in the answer, right? This is what you have to do based on the policy. It's 5%. When you calculate 5%, this is your table, right? Now, as a table, if you as a 5%, deviation is only 0.1 or 0.2, is below 0.2, the deviation. So then this is acceptable. That's all you answer. The last thing, 2 steps to be performed by the auditor, that's Sarah. So now you have to evaluate reliability of data audit is going to use to calculate the expected rebate. That data about rebate is accurate. Can auditor develop expectation for the amount? In this case, please write expectation is 5%. Is it suitable for the particular procedure given? Yes, because we want to verify rebates which is going with sales, therefore it is suitable. What is the difference? Is it acceptable? Yes, you will definitely get this mark. So now we are complete in our very first session in this highly exam focused series, right? I want to emphasize that there may be another follow-up sessions. Now the last 5 minutes is devoted to make sure that you brush up now, because see, it's a backward approach. We started with a paper and completely answered. Now you also ask whether you know some critical theoretical concept. If the examiner asks you what is audit planning in MCQ, remember audit planning has 2 components. One is overall audit strategy that I haven't discussed in this lecture, but we have to know overall audit strategy. If you properly learn that story, you will say it's about direction, supervision. Sorry, overall audit strategy is about the scoping, direction, timing, and resourcing, right? This is overall audit strategy. So if you want a name for this, STARD. Right? So I will cover this, so it's not covered. In an audit plan, there are 2 things. One is to have a risk assessment procedure. In this case study, we identified the PPE, revenue, right, provision. After risk assessment, we decide further audit procedures. For sales, we wanted to do analytical procedure, substantive analytical procedure. For sales, we wanted to do confirmation, we wanted to do cutoff. These 2 together is called audit plan, risk assessment, further audit procedure, plus third part of the audit plan is other mandatory audit procedure. For example, auditing standard says auditor has to attend the stock count. So audit plan has 3 things. One is risk assessment, further audit procedure, and other procedure. Example, mandatory other procedures required by Sri Lanka auditing standard. Those are the 3 things, right? Then when it comes to the this part, very powerful diagram, what we actually do in auditing, in this discussion we had, several inherent risks were identified. For example, in this company, property, plant and equipment, we found inherent risks. right? And we haven't been given specific control risk. Now, usually what we do is a risk assessment. I explained to you very big thing as a part of this discussion. Risk assessment means understanding about 6 things. Those 6 are very important: industry, nature of the entity, and business objectives and strategies, then internal controls, KPIs, and accounting policies. You see how many answers accounting policy we had PPE answer, right? Now business objective, strategies, and business risks. So we had several business risks in that case study. So separately, part A of the question is to write business risk, and that case study is silent about internal control. That case study is silent about targets. But in another case study, these other things can come. So that's how you look at. And as I told you, we haven't discussed about the overall audit strategy. But we said the plan has 1 risk assessment, second, third one is other audit procedure. So this last part is the scoping, direction, timing, and resourcing is a part of overall audit strategy, which I haven't covered in this session. This concept will be covered through another session, right? And it will be going to your toolkit. Now finally, I will also share with you, after doing all of these cases, this is going to be your lifesaver, that this is not an open book question, open book paper. So in my history of teaching advanced auditing for 20 years almost, we teach, it is mostly at advanced strategic level before this syllabus all the time. And from 2010, it's open book. So students, they have the book and go. But you don't have any book. You have to have free mind, confidence to write. That's why I said this approach is to start with a blank paper. While the paper is blank, you can't keep answer blank. You need to have some powerful concepts. When you see the question, the answer comes. And so that purpose is very, very important. You have this knowledge toolkit. See what we discussed, business risk. This is the business risk. This is the risk of misstatement. This is analytical procedure. I'll complete this. As we do questions, this will build. So this finishes our very first session. So like I told you, prepare for the next discussion. So before you do that, before you watch the next video, take a blank paper, go to a place that you can work with without disruption, and read the question the way that I did. Read it, read the requirements, take a red pen. These are the answers for part A, part B. Start putting down your answer. Without that, don't watch the next video. The question that you need to do is December 21 case study. Please write December 21, question number 6, 20 marks. Right, another case study that goes to fraud, audit procedures, stock counts, things like that. From there we can go to another one. So therefore, don't forget, this is for serious students with commitment. With that, we bring this session to a closure. Thank you.